Hello everyone, it is Evan from the Trade Risk on Sunday, June 28th here with a weekly recap video. We're going to spend some time looking at the current state of the market and then get into some individual trade ideas for the week coming up. Video should be a little bit shorter, mostly contain actionable trade ideas for you. And as always, if you like these videos, please do subscribe, bottom right hand corner. It just keeps you up to date with all of the latest content that I publish to the YouTube page. So let's kick things off with the SPY ETF, and before we even look at some of the technical levels, let's just talk and look at things at a broad perspective here. Just visually take a look at the past 5 candles here, and you can see sort of the pain that the bulls were experiencing this week. In a general sense anyway. There were some pockets of opportunity out there, but if we just look at these past 5 candles here, you can see, we started off the week with the indecision here at the highs of this range. 212.50 or so is the level that I consider to be the top end of this range, and we held up there for the beginning, and then effectively we rolled over and kind of proceeded to sink lower for the rest of the week on Wednesday, Thursday, and Friday. So now we are firmly back in this range that we've been in, effectively all year, and we're back to sort of the same story. Now the big buzzword right now is Greece, and the headlines are painting some pretty scary headlines, effectively, with banks perhaps not opening on Monday. Greece, will be booted out of the Eurozone, and we don't know how the market's going to react to that just yet. I'm sure everybody's interested in seeing how the futures open up in a few hours on Sunday night, but the bottom line is, I think you don't need to be an expert in any of that, really, right? We are looking at price, and we don't know if this past 4 or 5 days has been pricing in a Greece default and a Greece exit, or perhaps we are going to get some gap down, and maybe this will kick off potentially a longer and more prolonged correction that many say we so desperately need. So we don't know, is ultimately the point I just want to make real quickly here, and I think we just really need to focus on the ranges at hand. 208 has been holding as support, as sloppy and as how perhaps frustrating this range has been for this year. 208 has really held up pretty strongly for most of this year. We also had 204.50 below that holding a support. So those are really the big markers we need to have on watch on the downside. And then on the upside, 212.50 I think is still sort of the target that the bulls need to take out. It sure would be something with all these headlines coming out tonight that maybe we this has all been priced in and we get a nice pop and make a run for the upside. I'm not saying that that's a likely scenario, but the point is we just don't know. We're going to have to see how this market digests this news and take it one day at a time. So I know for me, my exposure remains very low at this point. I think I'm below 20% or probably around 15 to 20% invested right now, just net long. I got no shorts on, just a few longs that have been outperforming this market, and I feel comfortable there. We'll take it one day at a time and increase that or decrease that as necessary. So I think looking at this range again, this is the same range and levels, and all of these candles are just in here for the past few months, so my analysis really hasn't changed. 208 downside, 212.50 upside, keeping things very simple until we get some definitive break of either one of those bounds. Then I am going to stay relatively neutral. Now, if we look at some of the other indices like the IWM, this again has been the leader recently, and this is very healthy. This already has had the breakout. It's now on a 3-day pullback. You can see some of these the bottoming tails here over Thursday and Friday, so it looks like some buyers are potentially stepping in here, getting a little interested as we come back down and retest the breakout. I think that looks constructive, but we need to see if we can actually really stabilize here and get a green day come Monday or Tuesday of this week to potentially see if we can probe back to the upside. We're above all the fast-moving averages, so there's really, there's zero damage here. This is a very strong market, and this is the small caps where risk appetite is typically seen as very bullish when this index leads. So I think everything looks good here in the Russell. I think the Qs, again, it's pretty similar scenario to the SPY. It's basically range bound here, needs to get back above 111. It's currently testing this this level that has played an interesting role at 109. This was holding as resistance back here in March and in April. So we're at a interesting area in the Qs, but again, you can just chalk it up as range-bound behavior right now, and I wouldn't read too much else into it. So I think that's where we stand. Again, still very neutral. It's, really, I think this year has always been a kind of a neutral. One foot in the door goes to a bullish scenario, and then it goes neutral to 1 foot bearish. So I think we're just shifting here. I think there's opportunity if you look for it, but it is difficult, and you need to perhaps take profits a little quicker in those situations when you do have them. So I think that's where we are. Let's look at some of the leading sectors real quick, the lagging sectors, and then we're going to get into some individual trade ideas. So top 3 bullish sectors that you want to be looking for opportunity continues to be biotech. Again, we had the nice breakout. We are now on a 3-4 day pullback. Let's see if bulls want to step in here and buy this breakout retest around 368. See the tail here a little bit on Friday. Looks like they're sort of interested. Let's see if they can continue to rally or perhaps continue that bounce into next week. XLY, consumer discretionary, basing out really nice. This is a great looking pattern. So a nice breakout above this $77 level, and now we're flagging going sideways here above the fast moving average 8 EMA. This looks really good to me. I think if we got a break above 78 again, this trend continues to the upside. And then finally, healthcare continues to stay really strong. Very similar scenario. We got the breakout. We're holding high above the fast moving averages. This looks good. On the downside, the bottom 3, the semis got hit really hard on Friday, down 3%. So, we looked for them to be really the leaders here. Late May, we saw this big breakout expansion bar to the upside, which of course was faded and, really looks to be some type of false breakout at this point. I think SMH at best is just range bound right here, needs more time, but this certainly is not a good looking candle here, so you wouldn't want to see too much follow through there. XLB, another sector that's really rough here. The materials as they continue to slide lower here. And then finally XLK, this one again was beaten up this past Friday, sinking back below this recent range and now testing where bulls had stepped in previously here earlier in June, right around the lower $42 levels. So those are some of the leading and lagging sectors, things to keep in mind when you're picking your stocks and looking for exposure either on the short or long side. So without further, let's get into some individual trade ideas for the week here. First is OA, and this setup is not ready yet, but I thought I'd just post it anyway. It's dead in the center of this range, but it is consolidating very cleanly here, and I think it's interesting to have on your radar. 77.60 or so, 72.80 on the downside. Again, I don't think we're ready here, but if you look at a weekly chart, you can see very clean move, and this one looks good when we can eventually get a breakout in one direction there. GD, this is a name I'm actually already long. We got long this at the in the premium membership here at the Trade Risk right around 142.23 back a couple of weeks ago. We scaled some up here, and I'd actually look to add to this trade if we can break back above this recent consolidation here. We had a bad day on Thursday, bearish day on Thursday, closing all the way on the lows, but then we recovered most of that on Friday. Session outperforming nicely. So see if we can get some continuation next week. I think this one looks good. I would probably add to my long, and if you're not involved in it, I think you could probably establish a new position here if it can take out this cluster of highs. Take a look at the weekly chart. You can see how clean this pattern looks. So still could have plenty of legs to it, especially when you're looking at at the weekly chart. So GD is one I would keep on watch. JAH, I think I've talked about this one in the recent past here. Tried to get going on Friday but was faded. Still closed up on the day, outperformed, but needs to clear this 54.25 level. Again, I think a weekly chart paints the nice picture here. It's been consolidating nicely, and this one looks like it could get going soon. TUP, this one here also had a nice session on Friday. It's got a level of significance here, 67.70-ish. Has held as resistance in the recent past. It's been consolidating nicely in a very larger term, consolidation holding pattern here since mid-February, early February. If you look at a weekly chart, it has been beaten up for most of 2014, so it's trying to basically turn the tides here. It had a nice thrust in February. It's consolidating that, so let's see if it wants to continue to try to resume its trend higher here on the longer term picture. Yum is another one. Not my picture perfect. I like to see a little more of a sturdy sideways base, but definitely some momentum here. It's riding above all the fast moving averages. Nice session on Friday. Let's see if we can get some continuation there. I think this one looks good, even though it's not my exact cup of tea that I look at. Same thing with Time Warner here, TWC, but both crossed my scans and they certainly both look good right here. Nice session as well on Friday. A series of gap ups here late May, and then it's gone sideways above all the fast moving averages. Looks like it may want to continue, so something that you might be interested in. And on the short side, I only have two setups here. I haven't scanned through all the short ideas just yet. Maybe I'll post some more on the stream later. Apple is the first. If you remember, I tried to get short Apple right here. This was last Friday, actually. I took some short right around, basically where we closed on this Friday. I was quickly stopped out the next day on this gap up. Tried to get going, and then it failed. We're back at these lows here. Again, we keep testing this rising trend line, and it's a very clean trend line here. The more tests, the more likely it is to fail. I think if we see some downside action, you could see a pretty quick flush here in Apple. So that's definitely an interesting short setup in my mind that I would probably want to attack if given another good opportunity next week. And another short setup, LVNTA. This one looks like it's coming back down, not quite ready yet. Needs to break below this $40 level, $40.35 or so. It's been in a good uptrend, but since this day right here, back on 5/26, I think this was your change in character day. Really changed momentum. Fast moving averages still sloping down. You got a lower high, another lower high here. Let's see if it can break 40.35. I think this one could see more downside if we get that. And that's it. That's all I have for today. Still got some more scans to go through, but I thought I'd bring you guys at least those half dozen or so setups. And if you have any questions, feel free to contact me on StockTwits or Twitter. Otherwise, thank you for watching, and I will catch you next time.